Hi, I'm Adam Tarr with Citywide Real Estate in Phoenix, Arizona. And I've worked and continue to work with many Canadian citizens looking to buy a second home or investment property here in the Phoenix metro area. I'm often asked questions about taxes. There are many parts to this, and it isn't complicated. But today, I'm going to address the most common questions which pertain to taxes when selling a property. First, I need to point out that I'm not an accountant or a financial advisor. I highly recommend that you seek the counsel of an appropriate tax or financial professional to get answers to your specific needs. So, here's some general information for foreign nationals regarding taxation upon selling your property here. Canadian citizens and all foreign nationals selling a property in the U.S. are subject to capital gains taxes on profits from the sale. The amount of time the property is held will determine if it is a long or short-term capital gain. Internal Revenue Service, or the IRS, wants to ensure those capital gains taxes are paid and does so through FIRPTA, the Foreign Investment in Real Property Tax Act of 1980. The FIRPTA tax is imposed on non-resident individuals and foreign corporations. If a Canadian or any other foreign citizen sells a U.S. real property interest, a withholding tax of 10% of the gross sale price is due under FIRPTA. Keep in mind that this is a withholding tax and is not in addition to the capital gains, but it is withheld to pay capital gains taxes. The 10% withholding amount applies regardless of the adjusted basis in the property, and there are some exceptions to the withholding, but I'll get back to that in a minute. So, who withholds the tax? FIRPTA requires that the buyer in the property transfer is obligated to withhold 10% of the purchase price at closing and send it directly to the IRS instead of paying the full amount to the foreign seller. In Arizona, this is typically handled by the escrow company assisting with the transaction. The language in the Act states that the transferee must deduct and withhold 10% of the amount realized by the foreign seller. The amount realized is usually considered the purchase price at closing. The amount of gain is actually irrelevant. For example, let's assume a property was originally purchased for $250,000 and is now being sold by a foreign owner for $350,000. For ease of this example, let's not figure in any cost of sale and say there's a $100,000 profit. Capital gains rates will vary, but if we use 15% for this example, therefore the capital gains tax due is $15,000. At the time of sale, the buyer is required to withhold 10% of the purchase price, or $35,000. This will be paid to the IRS, who will then refund to the seller the difference between the withholding and the actual tax due. As I already mentioned, the tax withheld is not the amount actually due. The seller must file a U.S. income tax return for the year of the sale by the filing deadline. The return will show the amount of gain from the sale of the property and the amount of U.S. income tax due. The amount withheld is credited against any tax due. There are exceptions, as I mentioned, to the requirement to withhold under FIRPTA. Many Canadian citizens purchasing a vacation investment property will be able to take advantage of these exceptions. First, if the sale price is under $300,000 US and the buyer intends to use the property as a principal residence, FIRPTA withholding won't apply. The buyer doesn't have to be a U.S. citizen, but must reside in the property for at least 50% of the time that the property is in use during each of the first 2 years of the sale. Keep in mind that this means the withholding doesn't apply, but the seller will still be responsible to pay the capital gains tax, if applicable, and must file a U.S. tax return. Under this exception, a Canadian citizen selling a U.S. real property interest in Arizona for under $300,000 will receive the full purchase price without any withholding taxes. A withholding certificate is the second option. A withholding certificate can be obtained if the U.S. tax liability will be less than 10% of the sale price. The certificate may allow for reduced or eliminated withholding from the IRS and will indicate the appropriate amount to be withheld. So, that covers the basics of FIRPTA. I hope you found this helpful. If you are considering purchasing a second home in the Phoenix metro area, please feel free to contact me to help you with your search. I'm accustomed to working with out-of-state buyers and understand the extra facets to buying this way. Again, I am Adam Tarr, Realtor and Associate Broker with Citywide Real Estate, and you can reach me at 480-236-7374 or email me at adam@weareazrealestate.com. For you Canadians, that's adam@weareazrealestate.com. See, I know what I'm talking about. Have a great day. See you soon.